What up, everybody? How's it going? Lonnie here with the labs. Girls are chilling, got their bones. Kind of going back into the beginning on some of these and kind of retouching a lot how I look at these charts and stuff when I'm trading, not just TXC, but any equity or any crypto that you're looking at investing in. And you can do any of these. They all kind of overlap. But we're just going to look at TXC and go over some things. First thing, a lot of people immediately look at these and like to use the line because it's simple, and there's people who are intimidated by the candlestick patterns, but we want to break away from that. While the lines are really nice to kind of see a overall direction, and they present all of their own information, really you want to get into the candlestick patterns. Now, I personally like the Heiken Ashy candles. If you get into whatever exchange or whatever trading platform you're using and it offers that, I strongly suggest that one. But again, any candle is fine, and there's no real best. It's kind of what preference and what is more visually appealing to you, so that you can see these patterns. That's all we're doing, is we're just looking for patterns and trends. So while the candles are more beneficial and have more information than the basic line across the chart, is because when you're looking at these charts with all of the different time durations, obviously a 15-minute versus a 24-hour. This is basically a day, and this is a 15-minute period. But that's what each one of these candles represents. So when this one opened here and closes up here, the body of that candle represents the opening and closing. And then these lines that are above the candles are called wicks. Those represent the highs and the lows of that time period. So as you're looking for trends, it's depending on how long you plan to be on or what you're looking to invest or kind of what you're looking at. Obviously, a shorter 5-minute, 15-minute is more for the immediate move and direction. The 24-hour and weekly is more set up for longer terms and longer trend points. So, looking at this 1 hour, we see that this is. Let's use this one for an example. So, looking at this chart, this candle, you can see up here. O is for open, H is for high, L is for low, C is for closed, and then this gives you the percent change of it. So when we look at this one, you see that the open was 360 and the close was 365. So that is a green candle because it opened here and closed here. During that 1 hour timeline, the high it hit was all the way up here, 386. The lowest point that it hit was down here at 356. So in that one candle, I can see all that and gain that kind of basic knowledge. When you're looking at these 1 hours and 4 hours, and especially with TXC, we can see it a lot right now because TXC is in this kind of price discovery and range discovery. It's still very, very new, so there hasn't been enough volume to establish a lot of these support zones. As a price moves up, it's best that it stares and goes up back and forth. It doesn't go straight up, because if it was to go straight up, it would come straight down. Because we have to have these larger amounts of volume built into it to create support. As the price moves up and then sells a lot, and there's a lot of volume and consolidation where the price is range bound, tighter, smaller moves, that's the consolidation. When you see that consolidation and then a price dip below, on the way back up, that zone that had a lot of consolidation and a lot of volume is now going to be resistant. You get resistance points established as you're up, and then you come down, and then from going back up, you have support. Support is where the price is going to bounce off of. So when you see these large wicks, that indecisiveness and what you look for is the wick to be like this one, where the wick, the size of this is larger than the body of the candle. So most of the move was within this range, but there was a spike at some point. to come up to here. So the price really is wanting to accept this range, especially because we see tighter, more regular candles afterwards continue, and we had tighter kind of candles going in before. So as this run up led into this run up, it created a little bit of a pump, a little bit of a euphoric run, but it hit this point and reversed. As we look from this 387 line, and we can take a line over here and do a horizontal line, because this will extend at this price everywhere. And you can see how many times it's wicked up and touched that, or got near it and kind of thing. So what we know from this is that this is going to be support for stuff coming down and resistant for things coming up. So as we are sitting 352 below it, this 386 line is going to be resistant. So we will most likely test it, and unless there's a lot of volume and momentum to carry past it, we're going to reverse off of it. Just kind of an idea. So if you were trading this, you would be buying down here and here, and then letting it run through here, looking to take profit here, hoping that we come back down, and you see that we had some price accumulation here where there was a lot of short, tighter candles. We saw the candles here. We see a wick here. So this is kind of establishing another point of interest that I'm just going to use. And when you're doing these, you can pick the colors however you want. Colors don't mean anything other than to yourself for a visual representation, just so you can see the difference of them. So we can see how this came down, and these hard bottoms right here were right around this, so it's probably closer to like a true 375 area. But we're looking at a goal to trade this would be the move up above 376 and ideally sell this and then buy back into this for the next move up, whether it be here or higher. The more aggressive move, you could obviously try to get to here, because we know that whole numbers will always kind of act as a line of resistance or support. Just like the $3 was down here. When we touched $3 here, that was support. So you can see how the whole numbers are, and we can make these be white just because they're the whole number, and they're actually not based off a pattern. Those are just psychological numbers in humans and in the computers. Whole numbers just trigger. Just like every 5, 10, 15, 20 is going to trigger a psychological reaction. The algorithms will react. This is common. That's not based off the pattern. That's not based off the price move. It's purely based off just being, and that'll be in everything. Which is why we saw when we hit that 530 level, so much selling was triggered. And then as soon as a little bit of selling was triggered, a lot of selling snowballed behind it, because it wasn't just the whales, and it wasn't just the mid-level whales, it was also the algorithms are selling and triggered to sell. So whole numbers are always going to be reactive to that. So these points are kind of short-term. We're going to delete those just for now. But if we go into this 24-hour, whenever you're investing in something, you're looking into this long-term. You're not buying it just for a week. You're buying this for years or forever. You want to kind of see the direction or the trend that the equity or the crypto is moving in. So as we kind of go back to a longer, farther term out there, we can pick a point, and we're going to just kind of pick where we see these two large wicks right here. We're just going to use these. You know what, I'm going to even do the extended one just because. So this, when you do an extended line, you pick 2 points, and it extends in both directions. A lot of times I do the ray, and a ray is where you start at the 1 point, and then you pick the other point, and then it continues in the one direction. It doesn't go both directions. I just did the both directions on this one because there was enough activity behind it that I wanted to showcase both. Just like this one, I did the horizontal line. You could also do a horizontal ray, and it's just 1 point on forever. So this line, since it's going up and not horizontal, this is your baseline kind of thing from where all this was baseline here. It's going up in this diagonal direction. That is a bullish trend. Bullish meaning positive, price going up. Trend is just the direction that we're going to continue in, even if we see pullbacks along the way, still maintaining the overall upwards trend where price is going to increase over time. So we see, even just on this most basic, if we follow the trend, obviously it's a little bit shallower than what the path to 16 talks about and seeing as a goal for price, but that's taking into account the mining portion and exponential growth, which this should increase. Because if you go back to something like, we'll go to Bitcoin, for example, and just because this is the OG of all cryptos. Of course, I'm going to have slow internet today because we're making a video. Not going to give me a load. That's annoying. I'm going to pause this real quick. All right, sorry. I had to pause that briefly because I was having some internet difficulties, so hopefully that doesn't mess up this video. But when we're talking about trends, they continue until a new one's established. So, if we look at Bitcoin, the OG of OGs, we had, say, this trend was here to here, and broke below, it came back, and this, we could almost look and see that this timeline back in 2020 was retested here. And it's kind of funny how these trends will always kind of continue and become support, even like when you break out above it. It came up, broke above it, came back, tested it, and then it moved up again. So you could say that this trend is still kind of intact because it's almost trying to retest this, even though there was time below it and time above it. But if you delete that one and say that that was a kind of just a little unestablished trend, I guess, we'll just pick there and look at that one. And so this, you could say, was a trend direction, and it separated from that, creating a newer trend. So if we come back into this and say, well, from this point to skip one and let's just go to this point. Nope, we'll follow this one for direction. And we'll make this one a different color for visual purposes. So let's zoom in so we can kind of see the angles of everything. So this trend is bullish. Price is moving up. As long as it stays above this, price is bullish. But at this point, we had a breakout, and it created a sharper, more aggressively bullish trend. From here to here was tested. Here it even kind of tested. Wanted to come up and tested it one more time. It actually went below briefly, but it's looking to fight back to get above. So now that it is below this trend will technically act as resistance until it breaks above it and becomes support again. So that is just kind of how long-term trends can ultimately, you can deviate or create a new trend. And that's where you kind of call the trends channels. You could do horizontal channels, or what I like to find are parallel channels. When you take that lower trend line or the trend as support, and then you find the resistance portion to it, because every support has resistance. Every trend has a resistant point of it where it's going to break out, and then it's going to have the support that keeps it. So, and we have to redraw these. We're going to do the ray just because we're here. So we picked that point, and we see we were supported there, and we're just supported here. So what is the top end of this and the resistance to this trend that could create us a breakout? Kind of tough to get one because, again, when you have a project or a crypto or a equity that's only been trading, really the activity on this only goes back into June, as far as any kind of decent trading activity, with the majority of it being September, October, November. We're only 3 months of really any kind of activity that you can see and be measurable to find these. So these patterns and these resistance points are not going to be very strengthened. Whereas you look back at Bitcoin, and that is over 10, 15 years of those trends and those patterns establishing. So again, I don't really like trying to see this one on the resistance point, just because there's not a good we don't have enough data basically to support this one. So you could sit here and look at kind of the forecast of what we could see Texacoin moving up is within this. We would call this a wedge, where this is going to be support, and obviously this will be resistant, and the resistance is drastically moving up. Again, there's not going to be enough test on that to really hold and to be supportive. So the way that I'm seeing TXC and what I'm looking in are the support and resistance in the ladders, and more of like a ladder type move up. So when you come over here, and we're going to do a horizontal line, and as we stepped up on this big move, we went sideways, and we built this consolidation where price was in a tighter window, built support, and then the move up, and then we built support, and then the move up, and then we built support, and then we had a big move up, and we never really built support. So if you look at this first red candle, and we just go there, we're going to make these ones be, we're just for fun, we're going to make them yellow. So we broke above, and because this was the point that we were supposed to go sideways right here, is where the price was supposed to go sideways for a couple of days, it never did. Broke out, it had to come back and establish that sideways price to build the support here. So if we look now, this is a support, and obviously now that we're below it, we have to get above it, so it's resistance. But once we get above it, it's support. If we look to the next one, we can see that there was a little break action here, and also we saw that this was the first kind of natural bounce off this wick. So I like that point. And then we see that it's kind of around the top of these tighter candles before we had the downward move. So we're going to make that one the other side. So this is a channel now. This will be resistant. This will be resistant. But once past, this will be support. And it'll be kind of range bound in here. And we have to build that level. So then the next level is you see these wicks here. And we see the across here, not a whole lot, but we see a good amount here. So, and then this, we just know that this is going to be a level psychologically, $5.50. That's going to be a pretty good level. We could even, if we wanted to go really specific and get crazy, we could even come down here and say this first big move candle left us a spot here that lines up exactly with this wick. So you're just looking for multiple points as confirmation. The more times it touches, you could even see that once we got below this, there was a big move down. So we could say 477 is going to be a level of interest as we continue, and we could just like look at these as points that the price is going to be drawn to, and when it gets to, it's going to have not a hard time, but it's going to spend time there, and it's good that it spends time there. The whole point of this that allowed for this move was because the support was built in here. So if we just kind of go back and look here we could even say, what is the trend from this zone? If we take that bottom, very slight and subtle, but this from that red and this red before the breakout, let's make it a different color for, again, colors don't mean nothing other than for visual purposes of what helps us see. And we're not seeing any, well, obviously there was a little bit of a bounce here and a little bit of a bounce here. So there is some strength to this direction as support and resistance, which is nice to see because we are tightening and following it. So if I was kind of looking at, since this window, we're definitely bullish in a similar trend direction and still continuing. This confirms that there's more bullish activity going on. We can sit here and say top of this wick, point of interest. Let's look at what this one does just to see, and let's come to our top of this wick. As we're in this recent last couple days, this wick kind of established a point that we were not able to get over as resistance. Resistance points, I like to pick kind of more reds and stuff, just because it visually makes sense to me. No real rhyme or reason, and doesn't mean anything. So then I'm looking at this, and you're like, man, this is too busy. Some people might not like this many chart or lines drawn all over the place. Let's remove our horizontal ones, and and then this one is a little bit extra, not really helping. But we see this blue and this orange, the blue being this longer term, and then I like this now from this point to this point, and it runs parallel. So to me, this is going to be a trend channel, where as our price is going to be going, we should be moving within this range bound where we will have support off here, resistance here, support off here, resistance off here, support and resistance, and continuing through those horizontal lines that are still intact. Again, I don't want to make this super busy, but that is going to be, it was the 379, 380 was our October liquidity zone. So using that one, that was obviously support. We met that goal. That's why we tested the 529 a month early. And let's go ahead and we'll just put that 529 number. So those are our liquidity goals for the short term. We want to stay above this, and we want to test this one based on the goals that Bobby put out in front. We are heading in the right direction. We have a couple points that we have to get over. Just kind of looking through this. A lot of times I like to throw plot some points that I think could be points to consider, and then just kind of go back and verify. It's not like I drew it, so it's now going to have to listen to me. But I throw this line out because the wick was here. I saw some action here, and I saw some action here where there was a crossover, where a large wick below, large wick above, and this was a similar price range. So I look and all these points just point to me that this is a point of interest, that there is going to be price action here where it's going to want to draw up to it, or it's going to want to come down to it, so that makes it a resistance point and a support point. Again, there's no exact perfect science to the colors, or if you like going off the wicks or off the bodies, there's some personal preference. Just stay consistent with how you do it. If you are plotting your rays or your extended lines to find these trend directions, if you're plotting off of the wick, plot off the wick on the next point too. If you're plotting off the body of the candle, plot off the body of the candle. To me, as long as you stay consistent that way, and you're not going just really erratic all over the place, because you can obviously have some confirmation bias and create trends that are not really there. Best way to do it is help draw the obvious one first, the longest, farthest one out, and then do another one and make sure that it's confirmed in multiple points. You see like, oh, well, this one went above and then it went below and then it went above and then it never came back. Well, it came back over here down the line. So this is obviously, there is some strength to this direction, just like we saw in Bitcoin where it breaks out on a way, but it comes back because these trends and these areas are in the algorithms of trading are just naturally occurring, and that's where you become successful, is finding these patterns and seeing the direction that the price is going to want to go to, so that you get in at the support or at the pivot and you push it and then you let it go into the next zone. Even in a project like TXC, where obviously everybody is sitting here saying just buy, don't sell, well, that creates these unnatural moves. If you just buy, don't sell, you create this. And then as soon as one person decides to sell, then you create sells, don't buys, because if everybody all does it together, it's going to mess it up. The best thing to do is have this interchanging move where people are laddering, where the people that bought here sell here, let it come back a little bit, buy, and then sell here. If you're constantly circulating the price will just naturally ladder up. Somebody needs to sell to catch profit here so that they can buy back here and then they can sell up here to the person who bought here. You basically are taking turns and just feeding, it's hot potato kind of thing. The people buy here and sell here, and then they let the pullback and buy here. Well, somebody else that bought up here is now looking to sell up here, and this person is doing the same. So it'll just constantly feed each other and ladder, and these trends will stay intact. So when you're investing in something long term and you're looking for the 3-year, 5-year, 2-year, whatever your goal is, make sure you're buying in a solid supported trend. You could buy TXC comfortably, knowing that it's heading in a bullish direction at any of these prices realistically. If you really believe in the path to 16, you should be comfortable buying all the way up to 16 without blinking. You could look at the percentage of return. Buying at 350 and selling at 7 is 100% gain, doubling your money in 6 weeks or in 2 months or 3 months, whatever it is. That's a great return on investment. And being able to do that is a great advantage of being in early. Any of these patterns that we're looking at when we're trying to see the direction and the trend, always double check the volume of that move. We're not trying to do that. We're trying to go up. And for some reason my volume indicator is not on. When you are looking at these moves and you see a big price move like this, but the volume is much lower than these price moves, volume is your confirmation in direction. We want to see like more buys and sells, obviously. Oh, now it's stacked. That's awkward. How did we do that? This is our volume. Things getting crazy. All right, you're not cooperating. Get back down there. Don't know why it's being marked. Anyway, this is looking at the volume, and what you're trying to see is, this is just volume only now. This is kind of cool. You want to see volume confirm your direction. So whenever you see a big move up or a big move down, volume will kind of confirm that and show that is a true move. When we see volume building and prices moving, that's a confirmed direction. When you see volume falling and prices falling, that's not a true move. Typically what you're going to see is that is from a lack of confirmation or an invalid move, because no volume and a price drop means that there's just a little bit of uncertainty. So as soon as the volume picks up, typically the price will reverse opposite. Same could be said even if you see a large move up with no volume. More likely it is that it's going to reverse and correct to come back to a balance. So hope that touched on some of those beginning talking points and some of the basics. Again, if you have any questions and you want me to touch on a video specifically around something that you want to understand, whether it's trends, channels, resistance, any of these indicators that you look through, there's a ton of them. The biggest thing that you're looking at is what ones make sense. I like keeping it simple. I like the MACD because that is the moving averages, the convergence and divergence. That is like a confirmation of move. It shows you momentum very well. The moving averages are another really good one to use because whatever duration, if you're using a 1 hour or a day, it takes the average, 9 or 10 days or however long you want to see, and takes the trailing version of that, averages them up, and tells you what that is. So again, if you're looking at the price being, let's go EMA. This is just an exponential version of the moving average, and now we have this as full size. We got to get that out. So when you're doing these, your moving averages, you could do regular MA or the EMA. The EMA is slightly weighted with volume and a little bit more, so it won't move as sporadically. So I like doing a 9, and we'll just do, let's do green. Nope, that'll blend in too much. So let's do yellow and then make it a little bit bigger. So in these markets, you can pick whatever day you want that to be. There we go. However long you want it on your inputs. You could pick 9, you could pick 11, you could pick 22, 27, 24, 54, 110, and it's all just what will help you kind of, what are you looking to measure? The stock market and these algorithms and these tradings like to follow patterns of 3, multiples of 3. You could use your lucky number if it helps you with what you're looking for. So what I like to do is I like to have 2 at least while I'm looking at these. I like to have a shorter one, so that's going to be 9 days, and then I like to have a longer one. Let's call this one 90 days. Just because what that is, or 90, it'll be hours or 15 minutes. It doesn't always stay to days, but for the sake of this one in the daily, I meant to change the color on that one so we can see it. I guess it's the blue one because this is not cooperating. All right, CoinMarketCap here, taking me off. Anyway, so this yellow one is going to represent the 9 days average, and the blue line is the 90-day, which is essentially 3 months. So if you look at how much we are above that, that again is another bullish indicator. If you come in and we tighten a little bit, we look here at the end of our line, and the 3-month average price of TXC is up. If you look up here, it's going to go over, is 387. The 9-day average is 358. So our shorter term average is below our longer term average. Our current price is below both. Those moving averages, because they are the average of price and average of volume, that means that there's a lot more people who have bought in that timeline above the current price, and we are above our long-term trend channel. In my head, I'm looking at that saying that there is going to be a fairly good size move up, because that 9 will move over above the 90. So as we get a move up to the upper part of this trend channel of the blue and the orange line. We might see a test even into the 4 or 477 or 422, in that range somewhere, to bring this 9-day average up. And when it crosses over, that is a bullish move. There's moves that you'll see, like this point when we crossed our 9-day below the longer term. That's where we saw this big move down. If we go back all the way, never really crossed because I don't even know if we can ever see a cross. Never was a cross above. It was always moving up pretty quickly in the beginning because that was the entry. So we'll have to go and look what this becomes down the road in the next video, or maybe in the video next month or something, maybe next week, depending on how long the price action wants to channel in this zone. But eventually you'll see this yellow likely cross above the blue, and that'll be a very positive indicator for price action. So again, this one is probably going to be boring for some. Hopefully it's helpful for most. I just want to make sure that everybody has some comfort and some understanding to this. It's a great opportunity with TXC to practice with these, finding which indicators you like, finding what trends you like and how you like plotting, and then trying to test buying in those zones, especially if you are looking at this in a long-term goal, as you're buying and trying to sell and get some profit. If you're really believing in 16, 40, 80, and so on going forward, if you ever accidentally miss a pivot or miss a point to buy, you might just get stuck holding a little bit longer until the price gets back up. So TXC, I think, is a really, really good one to practice with, because worst case scenario, instead of being able to buy and sell within a couple day window, maybe you just have to hold it for a little bit longer, or buy more if you really are believing in the project and seeing how far this can go. A great one to practice with and see where this goes. I hope everybody is making some money and is learning in this and getting some confidence as this project builds. The mine itself is creating the most value, and without the mines being built, there's no product to showcase the value. But as we're getting more and more miners, and we have these people who have been mining for coming up on 2 years now. Well, I won't be coming up on 2 years. We're about 18 months. But a lot of people have been mining for over a year. They want to be able to show the value of what they got into, and selling and buying in the market is what we got to do, especially for new people coming in who feel that they might have missed out a little bit, and they don't want to miss out too much before the price really ramps up and starts getting up towards its top end predictions. Being able to buy now is a great opportunity, seeing that we are still maintaining that uptrend and building strong stepping stones up. So for people who are getting in and are only going to see half a coin for a while, and even getting less as we get more miners, if they want to catch up and buy some of these coins, we got to be able to show them how to buy and where to buy. So on these exchanges, where the most volume and action is Bitmart. And then DexTrade was the first exchange that TXC was on. It is a tier 3 exchange, so it doesn't report as much, and it doesn't keep live data with CoinMarketCap. So CoinMarketCap doesn't trust it as much. CoinMarketCap verifies projects and is a vote of confidence when it does to investors. Those investors that come on will bring in outside liquidity that will not take liquidity from the project to establish the value of the market. So I'm a strong, believer or pumper, whatever you want to call me, that more people should be on Bitmart. MEXC. Those are the two biggest ones. They're not US friendly, so you have to have a VPN if you're going to be trading them or be out of the US. Bionomy and Pionex are two as well that are tier 2 that are better exchanges. They are both US friendly. You just have to make sure you use pionex.us and then Bionomy. And those are US friendly, tier 2, that'll get great data to CoinMarketCap and show that this is a verified project. XT is also another one that is up with MEXC and Bitmart as far as tier 2, but not US friendly. The Uniswap one is where you get your wrapped TXC that you can move across the Ethereum network and stake and earn some. You're providing liquidity in exchange for a return. Not a bad route to go, especially if you don't want to be actively buying and selling. You can move some of your coins to a wrapped version, put them on the Uniswap market, and stake them to the Ethereum network. I can make a whole nother video on that if you want for another road, but here's some of the exchanges that we're on now, and seeing that TXC is adding exchanges often is a great sign. And as these tier 2s get better data and better trading volume, you'll likely see those invites to the tier 1s. So hope this was a good basic little recap, and you guys all learned some. Sorry that it was long. I kind of get going and I don't know when to stop on some of these. I like talking about this stuff. So please send me some requests. I would love to make more videos talking about this stuff, making sure that everybody is learning and confident in their investments. So have a good evening. I'll see you guys on the next one.